Welcome to the Deep Dive. Today, we're going to be diving into the world of mobile apps and advertising with AppLovin Corporation.
Ticker symbol APP.
Ticker symbol APP, right? You've provided a mix of analyst reports and AppLovin's own Q3 2024 financial filing.
Yeah.
So we'll help you sift through all this information
That's a lot.
to determine if APP deserves a spot in your portfolio.
Absolutely. You've pulled together some really insightful resources for this deep dive.
Yeah.
We have got perspectives from TipRank's analysts and AppLovin's raw numbers from their own financial reports.
Yeah.
So let's see what we can uncover.
Okay, great. First, let's paint a quick picture of what AppLovin actually does. They're a major player in the mobile app world,
Yeah.
but their business model is more complex than you might think.
Yeah, it really is. AppLovin has two core revenue streams, which makes them particularly interesting.
Okay.
Their software platform offers tools for businesses to connect with and monetize global audiences through advertising.
Right.
It's kind of like a high-tech matchmaker, pairing app developers with the right users.
Yeah.
And they also own and operate a portfolio of mobile games,
Yeah.
generating revenue through in-app purchases and advertising.
So it sounds like they're not just helping other companies succeed, but also competing in the app market themselves.
Right.
That's an interesting position to be in.
Yeah, sure.
Now let's get to the financials. How is AppLovin performing?
Okay, well, looking at their financial statements, AppLovin is experiencing significant growth.
Okay.
Their revenue is up year over year, both for the last quarter and the 9 months leading up to September 30th, 2024.
Wow.
Their software platform revenue is particularly strong, driven by their app discovery product,
Yeah.
which helps businesses acquire new users.
So it seems like companies are really seeing the value in AppLovin's software platform for expanding their user base.
They are.
Is their app's revenue keeping pace with this growth?
While the app's revenue growth is more modest compared to the software platform, it's still showing positive momentum.
Okay.
They've seen an increase in in-app purchases
Right.
and a higher volume of advertising impressions, both of which are good signs.
That suggests a fairly diversified revenue stream,
Yeah,
with both segments contributing to growth.
it does.
What about their profitability?
Right.
Are they translating this revenue into actual profits?
Yes, they are. AppLovin has a healthy adjusted EBITDA margin.
Okay.
For those unfamiliar with EBITDA, it essentially reflects their profitability before accounting for things like interest taxes, depreciation, and amortization.
Right.
A healthy margin suggests they're converting a good portion of their revenue into profit.
Okay.
This is a positive signal for investors
Yeah.
looking for companies with strong financial foundations.
That all sounds encouraging.
It is.
However, we can't ignore the potential impacts of macroeconomic factors.
Right.
What concerns should we be aware of?
That's a crucial point. Even companies performing well can be affected by external forces.
Right.
AppLovin acknowledges in their financial reports
Okay.
that current macroeconomic conditions, such as inflation, rising interest rates, and a potential recession could lead to reduced advertising spending.
Right.
This could potentially slow AppLovin's growth, at least in the short term.
Okay.
It's a reminder to always consider the broader economic context when evaluating any investment.
Absolutely. It's easy to get caught up in a company's individual performance, but the big picture matters.
Yes.
Speaking of the future, how is AppLovin positioning itself for continued success? What's in their innovation pipeline?
Okay, well, AppLovin is investing heavily in their software platform,
Okay.
particularly in two key areas.
Yeah.
Make, their ad optimization engine, and adjust their measurement and analytics platform.
Okay.
They're also making significant investments in artificial intelligence, or AI,
Right.
to enhance their ad recommendations and improve the overall user experience. This means using complex algorithms to better understand user behavior and preferences, leading to more targeted and effective advertising campaigns.
AI is undeniably a major trend right now.
It is.
So it makes sense that they're incorporating it into their strategy.
It does.
Are they sticking solely to the mobile gaming market, or are they branching out?
They're certainly not limiting themselves.
Okay.
AppLovin has ambitious plans to expand beyond mobile gaming,
Okay.
exploring new markets like e-commerce and connected TV.
Oh, wow.
These areas represent significant growth opportunities,
Yeah.
but expanding into new territory requires substantial investment in research and development.
Sure.
Only time will tell if these investments will pay off.
Expanding into new markets is always a calculated risk.
It is.
So let's move on to valuation.
Okay.
What are analysts saying about AppLovin's stock?
TipRank's analysts have a strong buy consensus rating on APP,
Okay.
which initially sounds promising.
Yeah.
However, their price targets range quite drastically,
Whoa.
from a low of $220 to a high of $480.
Wow. Okay.
This discrepancy highlights the importance of your own due diligence.
Wow. That's a huge range. It seems even the experts have mixed opinions about where AppLovin stock is headed. What should investors take away from this?
The takeaway here is not to rely solely on analyst ratings.
Yeah.
While they can be informative, it's crucial to dig deeper into the company's financials,
Right.
understand their strategy, and consider overall market conditions.
Uh-huh.
The average 12-month price target suggests about 9.25% upside potential.
Okay.
But remember, this is just one data point in a complex equation.
It's always crucial to look beyond the headlines
Yes.
and form your own conclusions.
Absolutely.
AppLovin has also been acquiring other companies at a rapid pace.
Mm-hmm.
Can you tell us about their recent acquisitions?
A notable move was their acquisition of Adjust in April 2021,
Okay.
which significantly bolstered their software platform,
Right.
giving them a strong foothold in the measurement and analytics space.
And it seems their acquisition spree hasn't slowed down since then, right?
Correct. AppLovin's continuing to acquire studios and apps,
Right.
expanding their portfolio and reach. However, this aggressive strategy presents both opportunities and challenges.
Yeah.
While acquisitions can drive rapid growth and market share expansion, integration can be tricky,
Right.
especially when dealing with different company cultures and regulatory environments. It's essential to assess whether these acquisitions make strategic sense
Yeah.
and if they're truly adding value.
That's an important point. Acquisitions can sometimes lead to more complexity than benefit if not managed effectively.
Yeah, that's true.
Now let's shift gears to the pros and cons of owning AppLovin stock.
Okay.
Starting with the positives, what are some of the key opportunities that stand out?
As we've discussed, AppLovin's revenue growth is impressive,
Yeah.
particularly within their software platform.
Right.
They also boast healthy profit margins and positive free cash flow.
Okay.
Additionally, their aggressive growth strategy with a focus on innovation is appealing.
Right.
These factors make them attractive to growth-oriented investors.
And they have the leadership of co-founder Adam Foroughi, an experienced figure in the mobile app industry.
Absolutely. However, no investment is without risk.
Right.
What potential downsides should investors be aware of when considering AppLovin?
The macroeconomic headwinds we discussed earlier are a significant concern.
Yes.
If ad spending weakens, AppLovin's growth could be negatively impacted.
Definitely.
They also face intense competition in the mobile app and advertising landscape, which is constantly evolving.
Right.
That's a tough market
It is.
to be in.
Their reliance on third-party platforms like Apple and Google also poses a potential risk.
Okay.
Any changes in policies or fees imposed by these platforms could significantly impact AppLovin's business.
Right.
For example, changes to App Store fees or data privacy rules could disrupt their revenue streams or increase their costs.
That's a great point.
Ah.
It's also worth noting that AppLovin has been issuing a significant amount of stock.
Uh-huh.
Future issuances could dilute the value of existing shares, something investors need to be mindful of.
You're right to bring that up. Dilution is a factor that can impact shareholder returns, so it's important to understand how a company manages its share count.
Now let's talk about dividends.
Okay.
Can investors expect any payouts from AppLovin?
Based on their current financial statements, AppLovin does not pay dividends
Right.
and appears focused on reinvesting profits to fuel their growth strategy.
Okay.
If you're seeking income-generating investments, this is something to consider.
That's understandable given their focus on expansion, but what about share buybacks? Are they taking any actions to return value to shareholders?
They do have an active share repurchase program,
Okay.
which often signals management's confidence in the company's future prospects.
Right.
It suggests they believe their stock is undervalued, and buying back shares is a good use of capital.
However, we also need to factor in their significant debt load.
Uh-huh.
Balancing share buybacks with prudent debt management will be crucial for their long-term financial stability.
Exactly. It's a balancing act for any company to manage its debt, invest in growth, and return value to shareholders.
Let's step back and look at AppLovin's journey so far.
Yeah.
They've had a fairly impressive rise from startup to public company.
AppLovin embodies the classic Silicon Valley success story.
Yeah.
Founded in 2011, they've grown rapidly through a combination of innovation and, as we've discussed, strategic acquisitions.
And they went public relatively recently,
Right.
correct?
Their IPO was in April 2021 at $80 per share.
Wow.
The stock price has experienced volatility since then,
Right.
influenced by both overall market conditions and the company's own performance. This highlights the inherent risks associated with growth stocks,
Yeah.
especially in a dynamic market environment.
Volatility is definitely something investors need to be prepared for,
Yes,
especially in the tech sector.
absolutely.
Finally, let's address ESG factors.
Yeah.
Data privacy is a paramount concern in the ad tech industry.
Yes,
How is AppLovin handling this critical issue?
it's a valid concern. AppLovin's business model relies heavily on collecting and using user data to
Right.
target ads effectively.
Yeah.
This puts them under intense scrutiny from regulators. Data breaches or mishandling of user information could lead to significant fines and reputational damage.
So how are they mitigating these risks and ensuring responsible data use?
It's crucial for investors to delve deeper into AppLovin's data security practices
Yeah.
and how they're adapting to evolving regulations.
Right.
Transparency and a strong commitment to ethical data use are essential for maintaining user trust and avoiding costly penalties.
Absolutely. And beyond data, privacy investors might also want to consider other ESG factors,
Yeah.
such as diversity and inclusion in their workforce
Uh-huh.
and responsible content within their games.
Those are all valid points.
Mm.
ESG considerations are increasingly important for investors who want to align their portfolios with their values and consider the long-term sustainability of the companies they invest in.
Okay, great.
So
Lots to think about.
there's
With AppLovin.
It's a fascinating company.
Yeah, it is.
We've covered a lot of ground regarding AppLovin, from their financial performance to the potential risks they face. The key question now is this: is AppLovin a good fit for your portfolio?
That's the million-dollar question. We've explored the key factors, but ultimately you have to make that decision. What are your initial impressions of AppLovin? What excites you and what concerns you?
It's fascinating to consider how AppLovin's global reach could actually work in their favor,
Uh-huh.
especially given the potential for an economic downturn. Could their geographic diversification act as a buffer against a recession?
That's an intriguing point. If one region experiences a slowdown, their presence in other markets could potentially help offset those losses and provide more stability.
Precisely. And let's not forget that AppLovin isn't just an advertising platform, they're also a game developer. How might this dual focus play out in a recessionary environment? People often turn to entertainment like gaming during economic downturns as a way to escape or de-stress.
That's an interesting angle. Their app segment could potentially benefit from a recession,
Right.
which might counterbalance any weakness in their software platform revenue. It's fascinating how different parts of a business can react to economic shifts.
It highlights the importance of considering the broader context and potential ripple effects. Speaking of interconnectedness, let's revisit AppLovin's acquisition strategy.
Yes, we touched on it earlier, but it's such a crucial element of their growth story. AppLovin seems to be acquiring companies at an incredible pace.
They certainly are. And while some investors view that as a sign of strength and ambition, it's crucial to look beyond the surface. Are they overpaying for these acquisitions? Are they effectively integrating these new businesses, or are they adding unnecessary complexity?
Those are key questions for any investor to consider. It's not enough to simply look at top-line growth driven by acquisitions. You have to assess if those acquisitions are truly creating value or just adding to the company's complexity and potential challenges.
Exactly. It's all about the long-term value creation. And speaking of long-term considerations, cultural integration is another critical aspect of acquisitions that often gets overlooked. Can AppLovin successfully integrate teams with potentially different values, working styles, and leadership approaches? A clash of cultures can derail even the most strategically sound acquisitions.
It's almost as if they're trying to get ahead of investor concerns by explicitly addressing this. It'll be interesting to see how they navigate this challenge of maintaining their culture as they continue to grow, especially through acquisitions.
It underscores that successful acquisitions require more than just financial alignment. Cultural fit is essential for long-term success. Now let's talk about the competitive landscape. AppLovin operates in a very crowded and fiercely competitive market.
They're up against some of the biggest players in the tech industry. How can they carve out a sustainable advantage in such a competitive space?
Their focus on mobile gaming might be a key differentiator. They've developed deep expertise in acquiring, engaging, and monetizing mobile gamers. This specialized knowledge can be a valuable asset as they expand into other markets.
And it's not just about size, it's about smarts. AppLovin's investment in AI could be a game changer. Their AI-powered ad optimization engine AXON is designed to make ad campaigns more effective and efficient, which is crucial in a market where every dollar counts.
Now let's shift our focus to leadership. AppLovin is led by its co-founder, Adam Forey. What insights can we gain from his leadership style and vision for the company?
From their financial filings, it's evident that Forey has significant control over the company, particularly through his ownership of Class B common stock. He's the driving force behind AppLovin, and investors need to be comfortable with his vision and leadership style.
That's a crucial point. Forey has a proven track record in the mobile app industry, but it's essential for investors to understand his decision-making process, his tolerance for risk, and his long-term vision for AppLovin.
His leadership style becomes particularly interesting when considering AppLovin's aggressive acquisition strategy. Does he have the experience and the team necessary to effectively integrate all these new companies?
That's the big question. It's a significant challenge to integrate multiple companies, each with its own culture and processes. Investors should evaluate whether Forey's leadership and team have the capacity and expertise to manage this complexity.
And it's not just about the CEO. It's also essential to consider the board of directors. What is their expertise, and are they providing effective oversight of Forey and his management team?
Good corporate governance is paramount for any publicly traded company. Investors need to have confidence that the board is asking tough questions, holding management accountable, and ultimately protecting shareholder interests.
Excellent point. Now let's talk about regulatory risk, a significant concern for any company in the app and advertising technology space. We already discussed data privacy, but AppLovin faces many other regulatory hurdles.
The mobile app industry is under constant scrutiny from regulators worldwide, and AppLovin, as a major player, is right in the spotlight. They have to navigate complex issues around data privacy, antitrust concerns, and the impact of App Store fees on competition.
And it's not just about complying with existing regulations. The regulatory landscape is constantly evolving. AppLovin needs to be adaptable and proactive to avoid potential pitfalls and maintain compliance.
They're facing regulatory challenges on multiple fronts. There are privacy regulations like the GDPR in Europe and the CCPA in California, both of which are subject to ongoing changes and interpretations.
They're also dealing with antitrust concerns as regulators scrutinize their market power and the potential impact of their acquisitions on fair competition within the industry.
And then there's the ongoing battle over App Store fees. Apple and Google take a significant cut of AppLovin's revenue, and any changes to those fees or any new regulations governing app stores could have a major impact on their profitability.
It's a complex and evolving regulatory environment that investors need to understand and factor into their decision-making process.
Navigating this regulatory maze requires careful planning, dedicated resources, and a strong legal team. Even with these precautions, regulatory changes can still catch companies off guard.
It highlights the inherent uncertainty that comes with investing in industries facing significant regulatory scrutiny.
So we've covered a lot of ground in our deep dive into AppLovin. We've explored their strengths, their weaknesses, the opportunities they're pursuing, and the risks they face. Now, the crucial question is, what does this all mean for you as an investor?
We've presented the key factors and insights, but ultimately you have to connect the dots and determine if AppLovin aligns with your personal investment goals, your risk tolerance, and your overall vision for your portfolio.
If you're attracted to high-growth companies with a track record of innovation and an ambitious vision for the future, AppLovin might be worth considering. However, you need to be comfortable with the inherent risks, including the potential impact of macroeconomic headwinds, the complexities of their acquisition strategy, and the ongoing regulatory challenges they face.
Remember, this deep dive is just a starting point. It's crucial to conduct your own thorough research. Delve deeper into AppLovin's financials and form your own independent conclusions. We've explored AppLovin from multiple angles, analyzing their financials, their innovation pipeline, and the competitive landscape they operate in.
It's a fascinating story.
It is. But before we wrap up, let's shift our focus to a crucial aspect that often gets overlooked: AppLovin's long-term vision.
Yeah, it's easy to get caught up in the short-term fluctuations of the stock market and quarterly earnings reports.
Right.
However, truly successful companies are those that have a clear and compelling vision for the future.
And the leadership and the resources to execute that vision effectively.
Exactly.
So where does AppLovin see itself in the long run? What's their ultimate game plan?
From their financial filings and public statements, it's clear they're aiming for much more than just being a mobile gaming company.
Right.
Their ambitions extend to becoming a dominant force in the broader digital advertising ecosystem.
So they want to be the big dog. They're investing heavily in artificial intelligence and machine learning to create a more personalized and effective advertising experience. They're expanding beyond mobile gaming into new markets like e-commerce and connected TV, aiming to build a comprehensive platform that caters to businesses of all sizes.
It's an ambitious vision, no doubt.
It is.
But can they achieve it? The digital advertising landscape is incredibly competitive with giants like Google and Facebook vying for dominance. Can AppLovin, a relative newcomer, truly compete at that level?
That's where their deep expertise in mobile gaming could give them a competitive edge.
Yeah, could be.
They've mastered the art of acquiring, engaging, and monetizing mobile gamers. This specialized knowledge can be a valuable asset as they venture into new territories.
Right, and they're not afraid to be bold.
Yeah.
Their aggressive acquisition strategy demonstrates a willingness to take calculated risks and disrupt the established order. Whether this strategy will ultimately lead to lasting success remains to be seen, but it sets them apart from more cautious players in the industry.
So we have a company with an ambitious vision, bold leadership, and a unique focus on a rapidly growing market. But there's one more element to their long-term vision that I find particularly compelling.
What's that?
Their commitment to building a values-driven company.
Oh, that's interesting.
Exactly. AppLovin isn't just focused on financial success. They also emphasize building a company that aligns with their core values. They talk about fostering a culture of collaboration, innovation, and respect. They're actively promoting diversity and inclusion, and they're taking steps to reduce their environmental impact.
This focus on values may seem separate from their core business,
Yeah.
but it could be a strategic advantage. In today's world, consumers are increasingly conscious of the companies they support. They want to align themselves with brands that share their values.
So AppLovin is betting that their commitment to values will not only attract and retain top talent, but also resonate with consumers and cultivate brand loyalty. It's a long-term play, but it could be a winning strategy.
As you weigh your decision about whether to invest in AppLovin, consider this. Are you not only investing in their financial prospects, but also in their vision for a more values-driven future?
That's a powerful question to ponder. We've reached the end of our deep dive into AppLovin.
Wow.
And I hope you found this journey as insightful as we have. Remember, this is just the beginning of your research. Take the information we've discussed, dig deeper, ask your own questions, and make the decision that's right for you.
And if you enjoyed this deep dive and are eager to explore other fascinating companies, subscribe to our YouTube channel. Let us know in the comments what companies you'd like us to deep dive into next. Until then, happy investing.